Well, that was a quick wrap of all the startup news that came in today. Moving on, Fireside Ventures is on the path to identifying and nurturing brands that could one day take on rival giants like Unilever, Dabur, Britannia and others in the consumer goods industry. Mamaearth's IPO put the spotlight on the VC who continues to reap benefits from its 29 crore rupees investment in the beauty and personal care brand. Here's a special report on what's aiding Fireside in creating a legacy in the D2C space.
I met Varun on the phone, really liked what he was telling me. This was even before the business had started.
That's Kanwaljit Singh of Fireside Ventures that made riches on Mamaearth's IPO. Let's rewind a little. In 2016-17, Fireside Ventures became the first investor to join Mamaearth's cap table with an initial investment of 30 lakhs. The VC's founder and managing partner Kanwaljit Singh oversaw the transaction. What's interesting is, at the time, Fireside was yet to close its maiden fund. Singh, a former executive at India's largest consumer company HUL, crafted his investing lens at Helion Venture Partners, zooming in on emerging consumer brands. In fact, he led the first institutional round in ID Foods, showcasing his keen eye for promising opportunities in India's growing consumer market. Following his departure from Helion Venture Partners, Kanwaljit Singh founded Fireside Ventures with a clear mission: to support and invest in emerging consumer brands with the potential to disrupt and challenge established multi-million-dollar conglomerates. And his biggest winner turned out to be Mamaearth, which went on to list on the stock exchanges on November 7, 2023. The consumer-focused venture capital firm made a return of 18 times, recouping 547 crore rupees over an investment of 29 crore rupees in Mamaearth, of which 258 crore rupees came through the IPO.
I mean, it's been, like I was saying, a very surreal journey with not just Mamaearth, but just the experience of the whole new age brand space that we chose to participate in the last 7-8 years. And yes, I met Varun on the phone, really liked what he was telling me. This was even before the business had started. And then I met Varun and Ghazal in Delhi and just, fell in love with them and fell in love with the idea. And really that's how the journey started with them.
The VC has now further divested a 1.9% stake in the beauty and personal care's parent, Honasa Consumer. Nearly 63 lakh shares exchanged hands in the block deal, and the transaction is valued at approximately 238 crore rupees. In many ways, the journey of Mamaearth and Fireside mirrored India's D2C boom. With the third largest shopper base globally, India is now home to more than 800 D2C brands, as per KPMG. Riding on this wave, Fireside Ventures went on to invest in 40-plus companies that are leveraging digital infrastructure and social community to serve online-first millennials and Gen Z. Across its three funds totaling rupees 3,000 crore, Fireside has backed the likes of Licious, Bombay Shaving Company, Wakefit, Sleepy Owl, War Skin Care, among others.
We realized that digital infrastructure was actually disrupting the business of brands. And that was the intuition of getting in at that point of time. I think that was a point of time decision which really worked for us. Then COVID came, it accelerated the adoption of digital brands. And now the whole omni-channel, ONDC, quick commerce. So there are so many levers of growth. But fundamentally, the consumers are becoming smarter. They're looking for more choices. They want more interesting brands to consume. And just the infrastructure is playing into that, positive demand. And that really excites us about the future.
To date, Fireside has exited from 12 startups. It saw an exit from Quick24 after it was acquired by Big Basket, and also partially exited Boat after it raised $100 million from an affiliate of Warburg Pincus. The growing D2C wave also gave birth to the trend of large FMCG companies investing in online-first brands. ITC acquiring stake in Fireside Ventures' portfolio company Yoga Bar this year is an example.
Perennial favorite for us is always going to be FMCG. So, food and beverages and personal care. We believe that will continue to be one of the big areas of focus.
As the narrative of India's direct-to-consumer sector continues to unfold, Fireside Ventures is adapting its investment philosophy to align with evolving market dynamics. From its $225 million third fund, Fireside is looking to invest in 25 to 30 startups. Notably, the firm is placing a significant emphasis on consumer healthcare space, reflecting a forward-looking approach to emerging trends and opportunities.
We have started investing now also in the consumer health and consumer healthcare space. And we are finding that as a great extension of our overall thesis of looking at consumer brands. And we certainly see ourselves doubling down on that. We have already done several investments in the areas like probiotics, diabetes, fertility, and so on and so forth. And besides that, we are also seeing a lot of disruption happening in the home space. We also believe that the growth of the next decade will also be driven largely by what we are calling India 2.
D2C startups have raised over $2.5 billion since 2014, according to KPMG. This upward trajectory is projected to continue, with the market anticipated to reach a staggering $100 billion by 2025, making it a ripe investing ground for global venture capital firms. With Akhil Vishwanath, this is Aishwarya Anand for CNBC-TV18.
That's the story of Fireside Ventures. But with that, it is a wrap on this edition of Startup Street from